Yo. Okay, awesome. Thank you guys so much for joining us today. Stoked to have everybody here. We've got a great group of attendees coming in, and we have a great guest star today, and Justin Hunter from Confido. So thanks for being here, Justin. I appreciate you coming along.
Excited to be here. It's a fun one.
Yeah, it should be good. All right, so just to give you guys a sense for what we'll be looking at today, we're going to cover just some basic intros. You get a sense for who I am, who Justin is, what we both do. Then we're going to cover a quick overview of the finance function, just so we ground ourselves in exactly what we're talking about and provide kind of a framework for how to think about the function overall. We'll talk a little bit about what to solve for at each stage and how, and then provide a couple of keys to the game at each stage. So please feel free to chime in, use the Q&A function to drop any questions as we go. I'm excited to have some Drivepoint customers. I think we've got some Confido customers. And so we'll try and sprinkle in a couple of real world examples as well. But feel free to hit us up in the chat if you have any questions or you want us to stay or go deeper on anything that we touch on. So that said, let's get into it. By way of intro, I'm Austin, co-founder and CEO at Drivepoint, and Justin runs Confido. Justin, if you wouldn't mind kind of just kicking us off, giving us a little bit of background on yourself, how you got into this, and then what you're up to with Confido.
Amazing. Thanks, Austin. So Confido is a software that helps fast-growing consumer goods companies manage all things gross to net and retail. We're very focused on the retail side of the house. So everything from trade planning, sales forecasting, all the way through to deductions management in a single system. We work with brands who are just starting out in retail, all the way through brands that are have scaled nationally, brands like Olipop, Simple Mills, Feastables, and others. We tend to be flexible to whatever a brand needs at a given time, and ultimately try to kind of consolidate and get all the retail business kind of management in the tool. I got into this personally because I, as an intern, spent time on deductions management and forecasting at a small brand that really struggled with it. It was tedious, it was time consuming, and it was hard to be accurate. And felt like there's a better way to do it, and have been building the business ever since. Awesome.
Awesome. And then just talk a little bit about for those who might not be familiar in terms of like what is actually going on when you talk about gross to net excellence. I know because we have some folks I imagine are coming from the ecom world, may not know trade and sort of wholesale world as well, but just give us like the 10-second primer on trade and deductions.
Yeah. It's the retail world is very frustrating when it comes to actually collecting cash. It's almost like when you look at your paycheck and there's a number at the top, that's your gross income, and there's a number at the bottom that's much smaller, and all of these kind of different ticky-tack fees that you don't understand. It's similar in retail where when whether it's promotional activity or freight or fees, there's a huge expense base that comes with it, anywhere between 15 on the low end to upwards of 30-40% if you're growing really fast. It gets spent on these things, and the way they send it to you isn't in a clean, well-documented format. It's hieroglyphics and hundreds of pages of PDFs, and we help digitize and automate that whole process.
Yeah, it's awesome. I think to me the thing that's crazy is like most in the retail world, it's also kind of the biggest marketing lever that you have is sort of managing these trade spend discounts and promotions and other things with the vendors. And so not having visibility into there for those coming from ecom would be, in my opinion, kind of akin to like not knowing what your ad spend bill is going to be in a given month until after it happens or something like that. So huge bucket of spend, super important to profitability, and sort of notoriously hard to unlock. So we have a couple of mutual customers that speak super highly of you guys, and certainly I think a must-have, as we'll talk about as you start to scale in the wholesale world. And then just for people who aren't super aware of Drivepoint or don't know what we do, we are a strategic finance platform for scaling brands. So we have 100% focus on omni-channel and CPG. You can see some of our customers on the slide below. And basically we focus on, looking forward, helping customers plan the future, find the best spots for optimization, run scenarios so you can understand the impact of making choice A versus choice B, and ultimately helping to increase the enterprise value of the business. So, again, something that most founders, Justin, you and I have talked about this, like probably didn't get into business to run spreadsheets in a hardcore way. We had some insight about the market or a product, and so I think we're both sort of operating the same principle of we want to try and make these beautiful brand babies beautiful businesses, so to speak. All
We've
right, go ahead.
one shout out on Austin and the Drivepoint team. We've heard incredible things about how it centralizes all the information, because as you scale, it's awesome, you have more revenue, but it becomes harder to manage and love. I've heard great things about just how simple they make it to understand the whole picture.
Good to hear that. Thank you for the shameless plug. I appreciate it. We'll try and do some more here as we go. Okay. This topic is super interesting to me. I think Justin and I, when we were chatting about doing a webinar together, it sort of came up naturally in the course of this discussion. And I think it dovetailed into a question that we both get when we're talking to customers and prospects all the time, which is kind of, how should I build my finance function? You guys see a ton of different brands, you see a ton of different customers. How should I think about layering this as we grow? And so I wanted to first start with just kind of grounding ourselves in what is the finance function. I think we all sort of have a different notion of this coming in, but I wanted to present kind of a framework that I think can help us as we go and through this discussion and think about it. So, as I think about finance, basically there's sort of two parts of the function. One is operational finance, which is much more focused on looking backward and making sure all of our numbers are right, making sure that things are measured correctly, making sure that we're getting untangling all of the data that we have and using it to create a coherent set of financial statements and journal entries and things like that can be used as a fundamental basis for understanding the business going forward. And so that's the bucket on the left, right? So this is all things accounting, sort of basic financial reporting, paying your bills on time, collecting cash from your customers, staying online with tax and compliance, and really making sure that all of your systems are kind of talking to each other and supporting the finance function overall. Again, it's sort of like the connective tissue or plumbing of a lot of the data that works with this stuff. And then there's the right side of the triangle here, which is the forward-looking strategic side, which is really around, okay, using all of that amazing data that we created as part of the left side of the triangle to start looking forward. So what can we learn from that data, and what can we start to think about as far as changes we might want to make to our business? How do we adjust forecasts and plans for the future? How do we run scenarios to understand the impact of different trends that we're seeing in the historical data, or different things that we might want to do in the future? How do we track performance versus our plans so we can understand how well we're functioning as an organization from the top level down to the bottom level? And then really partnering with other parts of the business to unlock strategic initiatives. So, what happens if we want to launch a new product or open a new line of business or start selling in a new channel? And that's really sort of forward looking. So it's not perfect, but to me, it's a useful way to think about the two sides of it. And I think, one distinction is that people are often naturally oriented toward one side of this triangle than the other. So, not crazy, but typically unusual. Like an accountant has a very process oriented, sort of left-brained mindset, most typically, right? Very focused on making sure that things are correct, things are orderly. A strategic finance person or an FP&A person is going to be much more interested in being super analytical, understanding what might happen in the future, drawing inferences from data. Not to say that there aren't people who are good at both, but it's a little bit of a different mindset. I don't know if you would agree with that or kind of have any color on this split, Justin.
Yeah, I totally agree. I think they go hand in hand. Ultimately, harder to do kind of analysis. It's hard to do analysis without having the appropriate inputs on the accounting side. And then on the accounting side, ultimately, like, yes, there's the blocking and tackling you have to do no matter what, but much more, you can add a lot more value to the business if you actually can structure things in the way that actually drive insights downstream. And we see lots of times where when they don't marry up, there's a lot of kind of wasted time and effort and kind of missed opportunities. And when they do work well together, it's really cool to see kind of the impact on the whole business.
Yeah, I think the sort of operational side is absolutely necessary. Core foundation must be done really well. You cannot do business without it. And the strategic side sometimes gets a little bit left behind, but I think maybe where there's more leverage in terms of actually changing the business that you have now, right? So certainly a place to think about it as well. Okay, so that's awesome. We sort of understand, or we at least have a framework for today's discussion on what is finance, what's operational, what's strategic. The next thing I sort of wanted to just line up on is, okay, well, what is this thing? We sort of talked about the finance stack, and I think there's a couple of different ways to think about the stack. And there's also the capital stack, which is not what we're talking about today in terms of what capital products are you using. We can cover that in another webinar on another day. But today I'm really talking about sort of the set of three things that make up the finance function. And so, I think about it as these core pieces of sort of, okay, what is it that you're doing? Who's doing that work, and how is the work getting done? And there's some trade-offs as you think about each one of these pieces. And so in terms of what are you doing at each stage, there are certainly things that you could be doing at a certain stage, but we have limited resources and time. So what's a must-have versus what's a nice to have? What's a cost center versus a profit center in terms of the activities, right? Where am I spending cycles or calories just to get a little bit more efficient versus where am I actually driving profits for the business? And then what level of detail or professionalism is necessary? If you're at $0 to $5 million, like you really don't need to have audit ready financials. Obviously, as you scale, you do. So there's different sets of things that are different for each stage. Um, on the people side, obviously, there's a consideration around, do you hire this stuff internally? Do you outsource it? Do you need a specialist accounting firm or who's really deep on CPG, for example, or can you get away with a generalist firm who might be a little bit cheaper? And again, what's the right level of sophistication and effort that you're going to need from these people in terms of their experience levels? And then I think the last piece is, how does the work happen? And I think there's a ton of different ways to think about tooling, either building your own tools internally, buying tools off the shelf, buying bigger tools and having somebody else use those tools for you. And the considerations there, there's certainly advantages in terms of automation, but you may give up some flexibility when you go from, just spreadsheets to adding a toolkit. There's certainly cost versus value at each stage. At what point does it make sense to bring on that 30K software platform? And then certainly concerns around scalability of saying, okay, I may have a system that works. Will it continue to work in the future? When and how do I think about the scalability of my setup, so to speak? Lots of stuff moving in this space, obviously. So hopefully we can give some insight into what we think is right. Okay, so for the purposes of today's discussion, I thought it was useful to lay out a couple of different stages. And we've given them some labels here. These are intentionally broad. So, certainly everything that is true at one end of this range is probably not true at the other end of the range, but generally some guidelines. So just to break down how we thought about these a little bit, there's sort of this phase where you're starting the business, you're get up and running, you're going from 0 to 5 million of revenue. I call it sort of start a container, buy a container, sell a container stage. You're building the systems as you go. You're really looking for product market fit and trying to make sure that you have something sellable and you know how to reach your audience. Then there's this kind of stage from 5 to 20 million or so where you have a real business, you validated the product, you have distribution, and you're starting to build the systems and processes and functions kind of around that product, right? So you're starting to add your first layer of VPs or sort of functional leads. You're starting to distribute the team. You're starting to build the systems that you would need to scale. Then there's this zone from, big zone from 20 to 100, which is really about expanding distribution, adding new lines of product, things like that. But you start growing up as a company. And I think you also have to lay the foundation for, what might be a scale business doing $100 million or more, right? If you put all of those infrastructure investments off until that point, you're going to have a pretty interesting business, turning that corner of 9 figures or 10 figures. And then you get the stage of 100 million plus where, you really are trying to unlock a more dominant market presence, get yourself to the scale where an acquisition or an IPO or something like that makes sense, and really starting to act and operate like a much more mature company. So that's my sort of like rough breakdown. I don't know, Justin, how'd I do on the stages? What do you think?
I think that's great. Yeah, and I think too, like we definitely see a little bit of differences depending on like what the growth rate is. Where it may make sense to think about things as like a little bit later stage. If you think you're only going to be in a stage for a year, doesn't make sense to rebuild the whole function all the time. But I think you teed it up perfectly, Austin.
Cool. Yeah, again, very rough guides and sort of how to think about your business. There's certainly people going really fast in that $0 to $5 million bucket. There are people who are have different goals in that 20 to 100 bucket. So take all of it with a relative grain of salt as we go. All right. So in thinking about each of these stages, we're trying to sort of be a little bit prescriptive in terms of what we think the right setup is, or could be, and start to provide some insight on kind of what we're calling keys to the game for each stage. So Justin, feel free to chime in here as we go through, but really thinking first about this, this startup phase, this $0 to $5 million bucket, and trying to outline, okay, what are the people, the activities, and the tools that we should be thinking about, and what kind of money should we be thinking about spending on this? Because I think this is the key question that a lot of people we get asked as well, where don't have a great framework for how much finance should kind of cost or to build this stack. So starting on the left side of the triangle, and typically we would recommend getting a good outsourced accounting firm out of the box and making sure that you sort of are buttoned up there. Ideally, somebody with some CPG or consumer experience. And the key activities, want to make sure that we have our basic accounting stuff set up and that we're not behind on any tax issues, or we're not collecting state sales tax if we're selling online. So avoiding sort of like the key traps and must-have compliance issues there. Inventory accounting, starting to get our processes in place for counting inventory appropriately. I'll talk about that a little bit more. And then doing sort of basic AP&AR, making sure your bills are getting paid on time, making sure you're collecting cash from your customers on a reasonable basis. And typically, QuickBooks Online would be my recommendation for this spot. There are some people using Finaloop or some other tools. I think those tools have pros and cons as well, but the most durable stack, I think that's going to get you the furthest on the side, is QuickBooks plus an outsourced accounting setup. Any color on that part, Justin?
I think this is great. Yeah, I think particularly on the retail side, one of the common failure modes we'll see is like all of a sudden you get your first retail PO, you think you need to build a whole new kind of tech stack. Oftentimes the same tooling works decently well for at least that initial bit. And then once you get to, some scale, start to think about tools. But I'd be careful of you get excited that Walmart places an order, I'm going to go implement $10,000 worth of software. Like we encourage brands not to do that.
Yeah, I think it's a great call. It takes time, it takes energy, and I think also like it's hard to build systems around a business that this immature. So until you know what you're doing, it's hard to codify those processes in software. Cool. And then on the forward-looking side, this is an area where I think from 0 to 5, typically there's a founder or someone who tends more toward the operations and COO side of the world. That person I think needs to be very deeply involved in the forecasting, planning, strategic finance, and really leading it and be hands on keyboard with it. You may have some FP&A support services in the mix here as well, whether that's an FP&A or a CFO sort of arm of your accounting firm, or whether you have another consultant or somebody doing that. And then the key activities here, I recommend at this stage daily cash and KPI tracking. Ideally, in some ways, almost manual is better. You have to plug it into a spreadsheet. You'll get a sense for your numbers. Continuing to do really good but basic unit economic analyses to understand your margins on a per product per unit case. You have to be doing some sort of basic sales and inventory planning, certainly P&L forecasting and sort of a basic cash tracker, but you can get away with something that's a little bit homegrown. And I think you need kind of a 12 to 18 month forward looking model of some sort. Again, it doesn't have to be perfect, I think, but you should be able to see. I like to sort of think about this as most brands in this stage probably have somewhere between a quarter to 2 quarters of lead time in terms of, getting planned and getting distributed and getting co-packed and shipped to the warehouse or wherever they need to go. And so my rule of thumb is you should really be thinking, have a visibility into sort of the next 3 inventory cycles, basically, in terms of what you're thinking about. From a toolkit standpoint, most of the time we're talking about Excel with some templates. So we provide some templates. There are other good templates out there. Grab yourself a template. Don't feel like you have to start from scratch. Google Sheets is usually playing a big role at this point. Free apps on the Shopify side or in other places, or low-cost apps, I think are a good use here. Both Confido and Drivepoint are servicing customers in this range. But I think it's sort of a case-by-case basis. Certainly toward the tail end, I think you're ready for Drivepoint, and we have tons of customers in this bucket. But I think if you have some finance knowledge up here, especially, it's not absolutely mission critical, but you should really be thinking about spending somewhere in the neighborhood of 3 to 6 grand per month, kind of at minimum. And Justin and I were just debating like that's probably even creeping on you to get good accounting and some good basics in place, given what we've seen in the market. Um, Okay, and then just a couple of things to get right in this stage. So, Justin and I have talked about chart of accounts before. I know this is that you've talked about, but your chart of accounts is basically, um, the way that you categorize revenue and expenses. And so, getting that right is critical. Changing it or doing a wholesale overview later is just going to run up your accounting bill and cause you a bunch of headaches. So, we're spending some time there. Um, Inventory accounting. This is another one. So, not uncommon that we'll encounter brands at this stage where they're basically, not they're doing cash accounting for their inventory or their COGS. A key sign of this is in your P&L, you'll start to see lumpy gross margin numbers. So numbers that are kind of spiking up and down. Whereas, gross margin we would expect to stay relatively consistent on a month-to-month basis. And then the last piece is cash tracking. You just can't run out of cash at this stage, obviously. And you're probably new to the business and understanding it, but you should probably be doing a hands-on keyboard sort of daily cash in, cash out, so you get a sense for what that rhythm is, and you don't set up time or waste time setting up all these systems. Justin, what did I miss here?
I think this is great. Yeah, I think to like this is all, I mean, this sounds basic, but like this is when organization becomes really helpful and starts to, if you can get it right now, it can help a ton. So even like having all of your bills go to one place, having all of your payments go to one place and one bank account, like goes a long way for being able to scale. We have situations where we get, we work with a $20 million brand and they're just starting to consolidate everything and they're losing things. So it sounds basic, but organization doesn't is will go a long way, even though it doesn't feel necessary when you get 10 bills a month, but set up that accounting inbox and just basic hygiene.
Yep. Yeah, I think it's a good focus. Just don't let this stuff kind of slip through the cracks. Like, make sure that you don't have to spend all your cycles on it. You should certainly be probably more focused on making sure that the product sells, but ignoring this stuff altogether at your own peril, basically. Okay, cool. Let's move on to sort of stage two here and talk about what's happening in that $5 to $20 million bucket. So, we're starting to scale a little bit. We've got product market fit, we've got some initial distribution, we have some sense of our unit economics. Things are starting to feel right. We're building the team. And usually what we're seeing at this point is that this is the place where you make your first hire, or at least consider your first pure finance hire. So sometimes you've got a COO who's lights out at finance. They were an investment banker in a past life. You can get by without that person. But often we see kind of a generalist in the seat who comes in and is responsible for everything. And usually that's a combination of kind of managing your outsourced accounting firm, in my experience, starting to take over your financial modeling, your planning, and then some level of involvement with inventory and supply forecasting, sort of on a deeper level. Justin, I don't know, how does that line up with your sort of experience in this segment?
Yeah, I think this is great. I think what we find tends to work well here is brands being kind of picking either accounting or finance to be the thing that they have in house and being really and hiring someone really, really good that'll scale with the company and then outsourcing the other side to someone, who's either a bit more experienced or senior who can, may have to, work with brands at the next level of scale and not trying to hire two junior people. And then having kind of no leadership for them at this scale.
Yeah, I think that makes sense. Again, if you have that more senior sort of COO level person who has more of a finance background, they can probably cherry pick over here on the strategic side. If not, you may want to find someone external from that FP&A support lens or somebody who can help and really focus on getting the accounting stuff right. From an activity standpoint, I think the biggest things that start to change a little bit are, starting to get accounting by channel. So if you have multiple channels at this point in the business, maybe you started on Shopify to see if the brand would work and you moved into wholesale, and maybe you're selling now on Amazon, starting to be able to sort of make sure you're allocating costs at a channel level, I think is really important so you can understand who's contributing to the business. And then I think Justin, to your point, like the deduction and trade management stuff starts to get real, as well as AP and AR and kind of inventory management. So we start to see the opportunity to layer in some additional tooling on this side. I think QuickBooks for most brands is still perfectly sufficient kind of at this level, although you will start to see people looking up at NetSuite a little bit. Sub 20, I would encourage you not to go there, most likely. But you may start, this is, I think, an ideal time if you're a wholesale heavy brand to bring on Confido or a TPM solution. Sin7, I just put on here as an example of kind of one of the popular inventory management systems that's going to be able to give you more granular visibility into stock levels, where your physical products are, all of that good stuff. And then you may start to think about bringing on a specialized AP or AR tool, like Settle or Bill.com or something like that, to sort of manage that accounting inbox, as you mentioned, Justin, a little bit better. On the forward-looking side, I think daily cash flow hopefully isn't still necessary. At this point, you could probably move to weekly cash flow tracking. Again, probably still fairly manual on this side. I do think it's critical that you get to sort of classic three-statement modeling at this stage. So your homegrown model probably needs to be retired at this point, and you need to either have someone build one for you or use a service like Drivepoint. But getting to full balance sheet and cash flow forecasting on a monthly grade, I think is important. Sort of professionalizing demand planning so that you have a set process for turning that revenue forecast into purchase orders and demand. Starting to do regular variance analysis that okay, what did we say we were going to do? What did we actually do? Where did we miss? Where did we beat? So you can get better. And then starting to layer in some scenario analysis as well, so you can understand, hey, we've got these new products launching, we've got these new channels that we're thinking about. How are those things going to impact the bottom line? And certainly this is a place where I think Excel starts to play a role. I think this is a place where Drivepoint is sort of, really well positioned to come in and help you scale this side of the triangle without having to make a ton of full-time hires. And you'll probably start to move beyond the free Shopify apps into doing some custom reporting and either Google Sheets connected to a data warehouse or Looker Studio, or some of the more expensive BI tools to make sure that your data sources are synced together. And again, on the budget side, like the numbers get a little bit big quick, but as you start to include these FTEs, right? So we've got one FTE on the finance side sort of budgeted in here, as well as the accounting bill starts to probably come up a little bit as you start to split those things out by channel, get a little bit more granular. So you could easily be starting to see, thinking about spending, 20 to 40K a month, including those fully loaded FTEs on the finance function. So we're kind of operating somewhere in the neighborhood of about half a percentage point of revenue at this scale in terms of finance. What do you think, Justin?
Yeah, I think that's totally right. I think like what we see here is brands often start to have the budget to also start to think about really heavy systems, but we encourage them not to. I think start to get trigger happy about NetSuite or on rare occasions like a really big FP&A software like an Anaplan or something like that. Like encourage brands to be really thoughtful about if they really need those, because those ultimately, to get right, take at least half a person's kind of almost full-time bandwidth. And when you're this lean, like that can end up with you spending a lot of money for a software you never really get live.
Yep. Yeah, I think probably in terms of like those enterprise systems, this is the land of failed implementations, failed NetSuite implementations, failed adaptive implementations, things like that, where you see these bigger systems that are designed to have teams of 4 or 5 helping to implement them, as well as fairly expensive contractors. So the salespeople can be convincing in this range, but I tend to agree with you. Like vertical specific tools, things that are easy to get going, are a little bit better fit than some of those big systems at this stage. Okay, good stuff. As far as kind of keys to the game at this stage, I think, I mentioned it already, but definitely time to think about improving your forecasting and planning. If you're still kind of using Excel and duct tape and things are a little bit pieced together and there's only one person who knows how to manage the inventory forecast, and you don't have a great set of financials that you'd feel awesome about turning it around for an investor, time to start leveling up on that side. You should have a repeatable process. But it's also really critical that you understand what's necessary to scale and grow the business over the next 3 to 5 years, and sort of start expanding that aperture a little bit. Justin, this is one I think, I'd love your feedback on, but what we often see is like, as you expand into more than one channel, that accounting gets really complex really quickly, and it can kind of get away from you.
We see this a lot on our end, particularly also when you start to have retailer expansion. You can think of retailers as like um, it's almost like a government in terms of complexity because of how much scale you have. You start having three, four, five, six, seven, eight retailers. Like it's a lot just to know how to even log in and find the data and manage it. And then this is where we see a lot of brands that start to feel like they're getting overwhelmed. And where some layers of kind of automation, whether that's something like Confido that's helping with the accounting side, or an EDI software, so you're not manually invoicing, really start to be quite helpful.
Yeah. And then we talked about this a little bit in the prep call as well. You mentioned it as sort of like, this idea that tools can provide a lot of leverage. I guess maybe I was more negative in my presentation on the third piece here, but it can also, in the same way that it's tempting to reach up and kind of pull down some of those enterprise level tools, I think it can also be tempting just to throw people at the problem and to say, okay, I'm going to build out a finance team and I'm going to build, hire a CFO and I'm going to get a couple of people below that CFO. I've had a couple of calls in the last month where we're encountering teams at 20 million that have 3, 4 finance people. And so, again, I think that's one sort of flag for me is to say, like, we're a little bit overbuilt here for kind of what we need. You may be built right for the next stage, but we pulled it in and it's probably taken a little bit of hit on this stage. Like you may not have the P&L really to support that, those 3 hires basically.
So,
Yeah,
so
Justin, you mentioned sort of like the positive side of this of getting some leverage out of tools or partners being critical at this stage. You want to just share some of that chatter?
yeah, we definitely see um we often see there's a lot of efficiency at this stage if you can hire someone who's is willing to do the work, but also has that strategic aspect. Obviously, it's a rare skill set, but paired with tools, it can be manageable. We've worked with brands where they run super lean, where they have a controller or a CFO who's willing to do like tactical accounting and FP&A work at this scale, and um, leverage tools to run it solo and get to the point where they can actually hand it off to someone and it's a true kind of FTE worth of work or things like that, and be really strategic about it versus having a junior team that's very specialized and then they're not fully utilized. We think there's a lot of kind of value here, to tools in partnership with people who are great on the other side.
Yeah, I think that's a good point. And I think it's also where we tend to see the most diversity in the stack. Like there are some people who still are operating in that I have nobody or I just have an outsourced accountant, and people who have 4 hires. So lots of difference there in terms of how people are approaching the problem at this stage. All right, 20 to 100. Things are going. We got some distribution, we got some scale. We can see the path to 100 million. Um, Justin, maybe just touch on, we can sort of, instead of reading off the slides, tell me what you're seeing in terms of, key things that need to get added here, differences in sort of tech stack or what you're seeing from a people standpoint, especially.
Yeah, we start to see people want to shift things largely in house. They may leave a couple of kind of areas with outsourced accounting, but they start to really think about building kind of building it all internally. We also see that the demands for finance tend to go up, even accelerate really rapidly. You start to have a board that really cares about your financials, and the demands there. You start to actually have other department heads that are much more intently trying to manage kind of their P&Ls and understand their impact. So there's just more asks on the table, alongside potentially rapidly kind of expanding like underlying transaction volumes on the accounting side, where at this scale you tend to be in many retailers that you have to deal with. You may be multiple product lines and dealing with all of that inventory complexity. So this is where things start to get quite heavy, and we find a lot of the best teams are there's someone. It's often 2 people, like one person who can take the finance side and really own it, and then someone on the accounting side, just because there's so much complexity, it's hard to manage with one person.
Yep. Yeah, that's kind of exactly what we typically see. So I've got sort of our, this first line of people on the top here, this finance lead kind of representing that same athlete that we hired in the previous stage, right? Who was sort of seeing across all things finance. Usually what we see is they start at this scale to get really sucked into just the volume of financial operations work. So as you scale channels, you scale transaction volume, they end up spending a lot more time on that side of the house. And so typically we see this being a good time to hire a controller or someone on that side, either a controller or a senior staff accountant, someone on that side who's really can take control and help manage that outsourced relationship, maybe take some things off that plate so that bill starts to go down a little bit and you start making that transition more into in-house. You start getting additional dimensions in terms of the accounting. So in the previous stage, we talked about channel. You mentioned department or sort of like different departments starting to come into play. So you just get more, I would say, like accounting mechanics in terms of starting to potentially add classes or departments to your GL and thinking about it that way. And then I put sort of standards adherence in here as like you're starting to your point of having a board or having some other folks, like you got to start to pay a little bit closer attention to gap. Maybe there's some things that we need to do on the revenue recognition side that we hadn't previously had to do. So interesting stuff starts to happen where you just need to pay more attention to that. On the tool standpoint, this is where NetSuite comes into play. You start seeing an EDI partner like an SPS or a Crystal become almost a necessity. You certainly need Confido or something on the trade management side at this point. And then, on the forward-looking piece, I think if you're still, purely on Excel or purely on Excel with an outsourced service, time to start thinking about building some sort of a source of truth internally, so you don't have a hit by a bus problem. Obviously, we think Drivepoint's a great solution to that. Time to start getting sort of your muscle memory on monthly rolling forecasting, maybe getting into weekly demand planning, doing more detailed, more consistent variance analysis, and sort of you're starting to build that budget again, things that your board or someone's going to want to start to be interested in. And then Justin, to your point, collaborative budgeting, collaborative finance starts to come into play where you're going to need the department heads both, and they're going to need you from a finance function to be doing more to help out and really understand how the actions and the budgets and the spend of the marketing team and the ops team and the customer success team all contribute to the actual underlying financials. So typically, this is where we also start to see people making investments, maybe in more, if they are using more specialized inventory planning tools, like Atomic or Fuse Inventory or something like that. And we start to see people building out their own BI tooling. So, using Looker Studio, doing a Looker install, getting a data warehouse set up, all things that, I think start to become reasonable as you approach that $100 million mark. And then for budget here, we put sort of 50 to 75K per month. You're starting to actually come down as a percentage of revenue. So instead of being at around 0.5%, I think you can be maybe a little bit below that. But Justin, you also called out, which I think is worth talking about, sort of how fast the accounting bills especially start to go up. And I'll kind of echo the same thing on the fractional CFO side.
Yeah, we see that a lot too, where I think a lot of these outsourced accounting firms build their model and being able to, have 5, 10 people to an account. You start to actually almost need a dedicated person. And when you're paying, to make the margins work for them, kind of 2x, what you might cost to hire someone internally per hour, your bills are getting pretty aggressive depending on the firm. And, sometimes they can offshore some of the work to kind of eat against that cost. But a lot of times, you end up starting to pay more than an FTE. And some firms are great at scaling quality, but it starts to get a little bit harder when you start to need context to really be able to do it well.
Yeah, I think we see the same thing on the finance side where, I think having a purely outsourced sort of FP&A team can get you pretty far. But I think once you get to this stage, two things happen. One, I think you want to start installing systems that can become a source of truth as you scale. And so you don't have a hit by a bus problem if your great FP&A person at fractional accounting firm A chooses to move on or chooses to do something. And so all your knowledge isn't necessarily locked up in one person. And I think the cost of, you're going to have more demands from more teams wanting to understand, hey, what's the impact of this change? What's the impact of this change? Can you pull a P&L report for me on this other thing, and starting to do that? And so, being able to provide that leverage without having it trigger hourly rates every single time starts to become pretty accretive. I've seen people in this bucket spending almost $100,000 a month on some of these relationships, which is obviously, to your point, you could start to hire some people at that and find some savings in that bucket. All right, keys to the game at this stage. I'll kind of go quickly through these things. We've touched on a lot of them. I think, controls start to become important. You're spending enough money in different places that really having a tight grip on what's being spent and how funds are being released and dispersed is meaningful. Again, you're going to have a little bit more oversight. People are looking. It's just time to tighten up controls as you have more people spending money and the budgets get bigger. Scenario planning, I think it sort of goes from anything close to maybe you could still kind of call it a nice to have in that $5 to $20 million bucket. In this zone, you're going to have some bigger decisions around product expansion, manufacturing, channel diversification, expensive hires, right? Like you need a system to be able to run those things through a model and understand what the potential changes of those decisions are going to be. It's kind of the stage where I feel like it's just not really kosher to be kind of trying to fly on gut instinct at this point with some of these big decisions, and they're going to be really meaningful to the end valuation of the business at this scale. And then we talked about a little bit of this already, but I think it's important to start building a system of record. A lot of times what we see in this phase is you'll have as you build those teams out, you'll have teams starting to create data fiefdoms, right, within the business. And so the marketing team has one set of numbers, and the ops team has another set of numbers, and the finance team has a third set of numbers. And that sort of incongruity of metrics and numbers often creates friction in the business. It creates a lot of overhead and just sort of like time spent trying to screw around with who has the right number, right? Like we've all been in a meeting where we spend the first 30 minutes arguing over the definition of customer acquisition cost or trade spend. And so I think getting that stuff right and starting to tie those pieces together and provide a central source is really meaningful. Brands who get this right earlier, I think, definitely tend to outperform brands who wait a long time and sort of muddle through at this stage. All right. Want to make sure we get some time for Q&A so we can kind of go through the $100 million plus bucket maybe a little bit faster. But no surprise, what starts to happen here is we start to build out the team a little bit more. So this is the first time you've seen a CFO on the slide or sort of a VP level hire in finance. I think you can get pretty far even without it. I may be on the skeptical, we have certainly have several customers that are well beyond this mark that don't have a sort of a professional CFO. So I don't want to set the tone that it's 100% necessary, but this is where that I think conversation starts to happen. And then you start to build out basically on both sides of this triangle. So you might have a controller, you might start adding staff accountants, AP and AR dedicated folks, especially if you're a retail heavy business where you've got lots of receivables from the different retailers. You're probably going to add a full-time FP&A person. You may have some data science on the other side. And then all kinds of different things are happening. You start to introduce, more detailed accounting, obviously, contract and vendor management. You're seeing Tipalti on here as one tool in terms of an example of a more complex AP and AR solution. Something like Ironclad for contract and vendor management starts to come into play as well. And then on the tool side, this is where we start to see people looking pretty seriously at building out bigger data warehouses, starting to look at tools like Adaptive or Anaplan on the planning side, where you could potentially make the case that stuff makes sense. So, budget starts to go, you're looking at 100 to 250K a month, probably, as you start layering in all these FTEs and you still have a bunch of contractors in the mix and a bunch of tooling in play. But as a percentage of revenue, even at 250K a month, you're still, more efficient than you were certainly in the last bucket. So we're starting to get toward that 15 to 25 kind of basis points of revenue in terms of overall spend on the function. Could certainly go up from there. I think anything between 25 and sort of a full point is justifiable depending on where you are in terms of scale. But that's how we thought about it here. Any color on this one, Justin?
No. And I think what's interesting is we see businesses at this scale with very different levels of complexity. Kind of, a lot of it falls into kind of, how many channels you're in, how many different product lines you have, where these businesses at this scale that are able to run fairly light, it's a Costco business with a couple of SKUs and a few other retailers versus, a business that operates a cold chain, segment, a shelf stable business, and 20 different commands. Like it really depends on the business on what makes sense. So we've seen people with, double this, or, just a couple people. Just really depends on the business.
Yeah, I think that's totally right. We see the same thing. You could be a D2C business operating with 4 SKUs and 4 people and get to 100 million, although that's pretty rare these days. Or you can be sort of a full omni-channel retailer with vertically integrated manufacturing and 400 employees and all kinds of other stuff going on. So yeah, a lot of flexibility in this one. Um, key things or keys to the game that we said at this point. I think the biggest one to me is just there's more people in the organization. So finance starts to become a team sport, right? It's not just about getting the numbers, it's about really starting to drive partnership and visibility across the organization. So everyone needs to start developing financial IQ, but you're going to have people who are, even if they're not in finance, have financial responsibility in terms of full P&L responsibility and working knowledge of what's going on. So you've got to both push information to those groups, and you have to be soliciting information back from them. So no matter how good of a solo finance person you are, those skills kind of tap out at this level, right? You've got to start talking to other people and making it a team game. And then a couple of other quick ones. This is the point at which optimizations matter. A couple basis points of improvement on margin in one place or another can deliver big results. So investing the time and energy to run scenarios, build an insights function, and sort of consistently run sensitivities and benchmarks, I think is key, right? That set of activities, you can spend a good amount of time on those activities and see meaningful return from even a couple of basis points that you can uncover from that stuff. And then, not that you can't start using AI and ML and some of the other tools that are available before this scale, but I think this is the point where you have enough transaction volume, you have enough historical volume where some data science, ML and AI laid over the top can start to be really impactful here for you to help you find your best customers and optimize budgets and all kinds of other things and really automate some of the forecasting.
The
All
the other
right.
thing here, wanted to call out was
Yeah.
this is when at least we start to see a lot of CFOs we talk to start to struggle with like career paths, because you start to have a full team and hierarchy, and you're not in that, if this works out, you get to manage a team. Like that can't be true for everyone. So we tend to find that there's this is also a time for thinking about the long-term structure in a way that you have to be really thoughtful of, or you're going to have a kind of a revolving door down below, which creates a lot of risk for the business as well.
Yep. Awesome. Well, I'd love to open it up to see if there are any questions. If not, I may sprinkle a couple in here for Justin, and see if we've got any others. But any questions from those listening? I see a couple of Drivepoint customers, Andrew and Haley, hanging out. I don't know if you guys have any insights for us. If not, I can throw some softballs at Justin here for a minute. Okay. Well, Justin, one question I have for you is sort of in particular thinking about brands that are focused on wholesale. Maybe they're somewhere in that that 5 to $20 million bucket. They're just getting into wholesale and sort of thinking about these relationships and starting to get a baseline on their trade spend. What have you seen just from the last couple of months in terms of working with retailers? What are the most interesting trends in sort of trade, or how people are using those strategies, or things that people should be looking out for in particular as they go to audit their invoices from Unify and KE?
Yeah, I mean, there is always invalid deductions, and I think there's always a process a brand should have around that. I think one of the more interesting things that's changing, that's new, is retailers have started to offer more and more methods of spending money with them. There's Instacart, there's all the shopper marketing things, where we're starting to see even our earlier brands, like it's getting very difficult to actually understand how much you're actually spending on all of these. And increasingly seeing brands wanting to kind of unify all of their data into one place has been a really interesting trend. We've chatted with brands at that stage who, like, CFO was like, holy, like I had no idea, but we were spending all this money on trade, and then we were spending $50,000 a month on shopper marketing. There's no way this account was profitable. So seeing a lot of interesting things there. That's changing as retailers are trying to find new profit pools.
Yep. Yeah, it's been very interesting for us, certainly, in looking at how different people are forecasting these spend numbers as well, and trying to get some sense of what's actually going into it. And I think the most people are still operating at a fairly high level from a forecasting perspective in terms of saying, hey, I'm going to operate toward a 18% kind of trade budget or something like that. And the biggest challenge that we see people having is actually trying to line up that 18% with what's actually happening in the world. So they may think that they were under, and then 3 months later find out that they were dramatically over and they're sort of unprofitable in some of these channels. So that's a huge one, I think, for us in terms of really getting to, you kind of have to go per retailer on all this stuff, and ideally per SKU and per month, and kind of line up that promo forecast with the full P&L. Cool. All right. Well, I don't have any more questions from the audience. Any last words of wisdom, Justin, if sort of you were counseling an initial brand as they made this journey through finance and thinking about investing in finance as a function or building it generally?
No, I think like I think the biggest thing we encourage people to do is to get the full menu of options at which I think is great. Like at all of these stages, like there are more and more software solutions coming on the market. There are a ton of more specialized firms, particularly as CP kind of there's more and more omni-channel businesses. Just getting the sense of the lay of the land before you make a decision, I think is really helpful, because sometimes we'll chat with people who, some of these are kind of one-way doors. Like you decide to hire an accounting team under you at 10 million of revenue. Like it's quite painful to transition that back. So just
Yep.
making sure you evaluate all of your options as you're progressing.
Cool. I think my final word of wisdom for anyone thinking about building out the function is, one, um, be realistic about the level of investment required to be good at this stuff, and about the risk of not doing it. Because I think, it's a place worth spending money. There's actually leverage in this function. And then the other one would be to find CPG specific or consumer specific help as much as possible. So both from a tools perspective, from a full-time hire perspective, from an activities, really that industry knowledge, I think, in consumer and CPG is critical, right? It'll help you avoid a lot of mistakes as you go. So I encourage you guys to seek out as many experts in the space who have prior experience working with exactly these type of companies, because I think it makes all the difference in terms of what you'll get for each dollar of investment here. Cool. All right. Well, thanks everyone for joining. Really appreciate it. We will send the video and the transcript out to all of you. We'll probably turn this into a blog post as well. So stay tuned for all that stuff. Thank you for joining, and we'll talk to everyone soon. Thanks, Justin.